Good evening. Welcome to Options Center. It is Wednesday after FOMC craziness this week. But guess what? We still have quadruple witching for Friday. So a lot of expirations are happening for options, futures, etc., etc. So what does that mean? That possibly we still have some big swings in store. But there is a scenario to where price may be pinned at that 4,000. Now, you see that I go over to the SPX and go to the trade tab. I've done that multiple times in the last few videos. And what we want to do, go up to the trade tab. Most brokers have this available, and my computer's been super slow, sorry. Okay, and we go to the trade tab. December 16th, we have the AM expiration. That's where tons of open interest from large buyers and sellers are going to expire. Now, if you notice over here, we are still looking forward to, on Friday evening, about a 63-point move, plus or minus, so to the upside or downside. That's what the options market is expecting. So, you know, that's still large enough to make some money, some day trades, things like that. So don't think this isn't, you know, we're just dead for the rest of the week. But in a sense, and the kind of moves that we have had, I think we might be done at that point. You notice that we're right here at the 4,000 expiration. That's no coincidence. You see 156,000 just on the call side and 160 on the put side. That is a massive, an enormous amount of open interest, and that's going to cause the market to be on that point like a magnet. And until we actually break to the upside or downside, that's going to be our next trend, and it's going to be off of this 4,000 mark. I don't know if we'll start that this week or in the AM on Friday. That all that tension kind of gets released. So maybe we have we start trending to which side that they're going to choose, either Friday or into next week. Okay, so I would not be surprised if we just kind of oscillated. We moved 60 points and came right back to the 4,000 area. We'll see. Let price do the talking. All right, let's go ahead and go to our regular analysis. We're gonna go ES on multiple time frames. I'm gonna run through them pretty quick. Nothing's changed on the higher time frames. And then if you're new here, please go down to that bottom right hand corner, hit that Options Center logo, and don't forget to subscribe and like the videos. That really helps out. I really appreciate all the support that you guys have given lately. We've had a little boost in likes and videos views and subscribers, and it's really starting to help. It's really starting to be noticeable. So let's keep getting this information out there, and let's keep trading and making some money. All right, so we're still in the bearish market. We have lower highs, lower lows. We're just holding right on that 8 EMA. It's right there by the 4,000. You know, we hold above it, our new trend is up. We hold below it, our new trend is down. Okay, I'm leaning bearish. Our next target is kind of getting this middle point here, and I do suspect we'll draw the bottom of the channel down by this 200 week. So I'm looking for this 3,500 area next, down to 3,200. Let's skip over to the weekly. And when I tell you guys, you know, when I start seeing some bullish stuff, you know, they almost had me going a little bit bullish there. We started breaking over that trend line, the downtrend line. You see we're triangulating here with the midpoint with the 200 week moving average in the 50 week. And we're kind of getting real tight in there. The moving averages are coming together, and we started to pop above there pre-market. And so, you know, I was trying to put my bull cap on and get ready for a push to the upside, and just denied. So that's why why I made the video denied the other day. The bulls couldn't push above it, and that just tells me that they're not ready for it. And what I would have imagined, yeah, that's the VIX expiration, is that we should, even if we're bullish, we should want to come up to this point, pull back, and then go up. That would be much healthier, and it would give you an opportunity to get into the market. So again, we're just oscillating. We're above this support area. We get below this 3,900 and see ya. That's been our midpoint through this whole thing, and it's what we call a bow and arrow at this point. Bow and arrow support resistance, because we have this. The bow is that triangle you see there, the triangle, and then the arrow is the support resistance. So we're looking to get underneath there, but right now we're just kind of holding up. So moving over to the daily. All right, the daily trend is our friend. Let's zoom in here just a little bit. This is what's important to us right now. We had that massive wick reversal potential candle, but we didn't get any follow through yet, and we can't consider that a reversal until we actually close below the body of this candle. Although that's a potential move, we have some work to do as bears. Now, we did start getting some bearish divergence on the daily, so that's concerning for the bulls. And also this RSI, we broke down from the trend up there, and we also have some bearish divergence there as well. Let's go ahead and put that in there so we don't forget. I'll draw a line there. Boom, bearish divergence. All right, so what are we looking at? You know, if we do, our catalysts are sort of gone there, so I don't suspect we'll get we're kind of looking for a large move to the upside, a large move to the downside. Yeah, we did make those moves, but it was mostly a large move and right back to that 4,000 area. And that's what we've been hanging out here since the end of October, basically. So we're getting tight in there. We're going to get ready to move pretty soon. Let's go down to that 65-minute chart and just kind of see what we're looking at for the rest of the week and into next week. But, you know, tomorrow as well. Okay, so you see this channel that we drew out. We have many touches there. 1, 2, 3, 4, 5, 6, 7 plus touches onto that channel. Is real valid. That's what we want to break down to see a move to the downside and to the upside. Really, at this point, we just want to kind of see this this high here break, because it's not only the downtrend line, it's also the weekly range from last week, and it's also that would kind of make it probable that this is just a correction, A, B, C correction, and then we get above there, we continue higher, and that would, you know, for some people they would call this a 1-2 setup to the upside for a bullish move. I'm not in the bull camp, but I do want to keep that in mind. And it looks like we're starting off just a little bit lower for the evening, or higher from the close, but looks like we're trying to push down a little bit. And also, same thing with this trend on the RSI. We're pushing up, bouncing off the trend, and we finally just broke it today. So, you know, there's a chance that we start moving down tomorrow and into Friday. So I'm already in my positions. I'm in my puts. I have a little bit of call protection to the upside, and I'm holding on to those because if we do move down, I'm going to be a part of that move. If we go into next week on Friday, I certainly will roll out my positions probably to the week after, just to give it a little bit of time. All right. And that's it, you guys. That's all I got for you today. I appreciate you being here. Don't forget to hit that notification. I put out these videos. I'm putting them out a lot more often. We're back full time in front of the desk, and we're having a great time trading once again and putting this information out there. So thanks again for your support. Have a wonderful night, and we'll talk to you tomorrow.